when I look for a trade to turn is a key reversal. I look for something like this. What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more. You can see that for the most part, the market has been doing nothing. So for the last 6 months, this is what's been happening. Nothing. It's been pushing on a string. So if you have expectations every day, why am I not making money? It's because the environment has changed. You know, I make all my money in directional environments. When the markets go directionally, I can make a whole bunch of money. But when the markets, are going nowhere, there's not a whole lot I can do. I come in here every day and I don't feel like I can, I have a lot to say because this is the reality. In the last, even 2 weeks, it's just been a punching bag. It's every day is the opposite of the day before. And so what I try and do is just find certain points, certain intersects. And that doesn't mean that you trade every day. There are just certain days that are more important than others. So it all starts off with kind of an analysis. What is really going on a chart? And so this has largely been in a downtrend. And maybe, the S&P got exactly here. Maybe I should just look at the S&P. But the S&P got exactly to this downtrend on Friday, this trend line, and then started going lower. And you can see right here, this is an area where there's an area of resistance. So again, you can see that there are certain points on the chart that are more important than others. Now, buried within all of this on both the S&P and the NASDAQ was these 2 days of grouping of prices where basically it looks like this. Now, I always say, what I look for when I look for a trade to turn is a key reversal, where I look for something like this. This tells me, okay, I know where my risk is. I know they try to push it there, they close on the low, and that's my risk. And so I look for one of these. If I think this is a double top, which it was, then I always look for the confirmation in the terms of this reversal right here. And that way I can set up my risk and reward. I can know that if I get short here, this is my risk and what have you. But, as you look at the market more and more, there's different ways to play it. And so when you see prices close on the high like this, right at a key area, that too can be a double top. Now, obviously, if prices continue going higher, we know it's not. So basically, I just look at certain things and, I'll show you. Yesterday, I bought the IGV because you had a group of prices that look like this. So to me, that actually looks like a bottom. Now, it all depends where this occurs, at the bottom or the top of a trend at a significant area. So we had this group of prices right here, right at this thing. So on Monday, when this thing just opened, sometimes, you look at these prices and you go, is that really going to be this top? I mean, this is how I traded Qualcomm last week based on this kind of setup. So you have this thing. And so you could see on Monday, we just opened lower. And I could just tell that this thing was going to fail right here. So this is where I went short. And my mindset was, okay, I'm going to buy puts here. And really, my tap out was here. So this was really my risk. And you can see the thing from the opening just died. And I made like 100% of my money just on that little day. And then you can see on Tuesday, I try to sell into a rally or buy puts into a rally. And you can see there was no rally and this thing just went straight down. So I didn't do anything that day. Nothing. No trades, no money. And, that's just part of the drill. Sometimes, again, what I try and do is get trades near an inflection point. where my risk is very, very tiny, where I can take a poke there, risk till there, and see what happens. And the thing is, once the move starts, now your risk reward. So now once it goes, now getting in here is a whole different thing than getting in there. And that's why, you got to be extremely careful and wait for your opportunities. So I sold here and I bought there yesterday. Why? Because if you connect all these lows, look at this. So you've kind of got this symmetrical triangle going on here. And so my mindset here was yesterday, I'm going to sell into a rally. So this is what I did. So if I think the market's going to rally, that means the puts are going to go lower, right? It's an inverse thing. The puts are a bet on the, so if the market is rallying, the puts are going down. So what I try and do is if the puts are trading at let's say the puts are trading at $2 on the opening, then the market starts rallying. I'll put a price in it like $1.20. And hopefully that it catches me, on this rally. And then when it fails, it goes the other way. Then this thing goes back to $3. So this is what I try and do. Instead of buying puts as it's going down, what I want to do is buy puts when the market's going up. And the converse with the calls. If you want to buy a market that's going up, I want to first wait for it to go down and catch it down there before it rallies. And, again, you've got to be extremely disciplined. And if you don't get, filled, then, you just wait. Don't chase markets with puts and calls, because the minute it turns on you, you're going to lose a lot of premium. So again, what I saw here was all these intersects right here. Now, I wasn't sure if we were still going to have one more day down here. And, I needed to see something like this, and we could still have that. I'm still not quite sure. But, certainly, I got in here, and when it went down there, that's where I got out. And it wasn't an accident. I was looking at a certain point on this chart. Now, again, this has got a number of different things going on here. This is a downtrend. This is a downtrend, but this is thus far a bottom. So you've got two different concepts going on here. Market's going down. And now the question is, are we going back down into the secular trend? Or is this really a bottom? In which case this could be a huge trap and we could see something like that. So, this is always part of my thinking. There are many things going on, in a chart like this. And so, you've gone straight down for 4 days. It looks like, we're going back into a bear market. Everybody's talking recession. The yield curve's never been this inverted in 60 years and on and on and on. It looks terrible. But in the meantime, we got this guy going here. And I have to recognize that until this is kind of taken out, this may be a bottom. So, it's playing with all those things. And then I'm right at the bottom of this support thing. So I took a shot. I got out of my shorts, and then I got aggressive and I bought call options on the close. And turns out, it looks like I'm going to be right, certainly on the opening. We're going to open higher. But this is kind of a mentality, right? Where I'm looking to get in at the top. I'm looking to get in at the bottom. In the middle, it's a whole lot. It's just random. And so, if you think it's still going to go down, then what I do is I put a limit order in a put, and try and catch it into a rally. And if the market doesn't rally, then I'm not going to be filled. But there are times to be aggressive, up here to short, down here to buy. And then there are times in the middle where you don't do anything. Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.